Hey guys, it's November 7th, and it's been a while since I took a video because I have been away for a month. When I visited family, went to Italy, didn't really trade during that span. Um, and even before that and after that, I was having issues with executing the trades using my setup. So what I'm doing is I'm back to looking at the prior day value area high low. I'm not identifying the low volume node, not identifying the high volume nodes, because what happens is price will kind of just work their way there anyways. So you don't need to know exactly where it is. You just need to know it's a little bit beyond the value area high or low. And then what you're doing is you're just waiting for the signal to go ahead and take the trade that you are going to get a continuation or a reversal. So let me show you what I'm doing. I've been having much better luck um, with executing these. So these yellow dashed lines are just 50% in between, the different levels. These levels from here, these two white lines, red line, this is from October 23rd. It was the start of, um, actually, wait a minute. Let's see what we got. So yep, this is the point of control. This is the prior day value area low. The high was already tested on October 22nd. So this was actually from Friday, October 17th. We're testing the value area low. And then we were also testing the value area low of October 23rd, as we can see with this line here. And there was, yeah, so let's focus on that for now. So what I'm doing now is I'm not really using the 1 minute time frame. I'm using 3 minute and 5 minutes. And I'm looking for not an engulfing candle, but an outside close candle. An outside close candle is just going to be a candle that closes beyond the prior candle, right? So this blue candle here is an outside close because it closed beyond the high of the prior candle. So if it's yellow, that means it closed beyond the prior candle's low. If it's blue, it closed beyond the high of the prior candle. In addition to that, it also has to have more volume than the prior candle. Okay, so every time it's blue or yellow, it closes beyond the prior candle and has more volume than that prior candle. And in addition to that, it's also closing on the right side of the 9 EMA. So if it's going to be a sell signal, it's got to be below the 9 EMA. If it's above the um, if it's above the 9 EMA, it's going to only be a long signal. So you can see here we got some blues candles as we're coming down to this point of control. We're not taking any of them until we test that point of control. You can see it came down, and again, these yellow dotted lines, they're just 50% in between each level. So this yellow dotted line is in between this prior day value area and this point of control. This point of control and this prior day value area, high or low, this is 50% of that. And they make really good targets for runners. So here you can see price came down, tested the point of control. We got this outside close with volume on the right side of the 9 EMA, and price shot up. That's a good trade right there on the 3 minute chart. We had some short signals early in the day too, where price came down, broke below this prior day value area high or low, came up, retested it. You can see we got a nice yellow candle, which is again an outside close, meaning we closed below the prior candle. We have more volume than the prior candle as seen down here. And we closed on the right side of the 9 EMA, and the candle isn't too big. So when I say too big, I mean if we're looking at average true range of the last 14 candles, if the signal candle is 2 times or larger than the average true range of the last 14 candles, it's going to be invalidated because it's too big of a move. And when that happens, it's typically like capitulation or something like that, manipulation. So that's that. So that's a filter that I have as well. So you can see here, this is yellow, so valid signal. We're rejecting off this after retesting it. That hits your 1R, hits the 50%. We get this candle again. This one's a little sketchy because you're going into an imbalance. This prior candle right here, there's no green area, meaning there's no imbalance. This one you can see we were trading into this green imbalance here. So that one was a little sketchy, but that one worked out as well, and that actually pushed it way down. And the crazy thing is this volatility came back in the last few weeks. That's 204 points. It's a big move right there down to the point of control, and the total move there was 250 points. Wow. And you can see, like I said, we came back down, tested this area, and we got a nice outside close with volume on the right side of the 9 EMA, and the candle isn't too large. This moves up, hits the 1R, and I'm just doing 1R right now just to build up, some fun, so a balance, and then we'll start leaving runners uh, for these areas. Now, here you can see there's this yellow candle, but the thing to know here is this is a yellow dash line. This isn't a level we're using to play off of. This is a area we're just using for targets. So remember that. That's not an area where you want to take a trade. Up here, we came up back to kind of where we started for the day, and we're facing resistance again in real time. In 3 minutes, we're going to have the market on close. So it's interesting where it's kind of situated up here. This is a good opportunity for it to sell off again. Um, just the way it's set up, basically at the open of the New York, which is literally where we're at right now. The New York opened at 25.11. Price is at 25.11. This is a really good time for price to sell off here as well, but we'll see what develops. And the other time frame I use is the 5 minute. I really like the 5 minutes off of these areas as well. We didn't get one down here. We did get one down here. We got another one here, and haven't gotten anything up here. And you'll see that it works really well. We had a sell-off candle here, an outside close with volume and 9 EMA. Then we had one down here. We have one right here that sells off all the way down, starting this big move down. And so you can see it works really well. It's much easier to execute. If it loses, it loses. You do get quite a few of these signals a day, which is nice. This is one you could possibly take here, but you're trading into an imbalance, so that could be a little sketchy. This one's perfect because this prior price action right here came out and took out these buy orders here. You can see it got bought up here, and then you can see once price is coming back down, you know the area is clear to buyers more than likely, and you're not going to really start facing buyers until this area down here. But even then, price continued downwards into from level to level, level to level to level to level. I mean, it works so well, and having the right trigger, the right entry model is a huge thing. And yeah, that's probably the largest thing. And I'm also going to show you. Well, actually, let's go over here, market on close. Let's see what's happening. Um, we got 30 seconds. Maybe I can switch over to NinjaTrader. Oops. 5 minute. No, it's not going to do it. All right. Okay. Are you kidding me? Now we got. I know it's a black screen. I'm working on it. Window capture. Okay. 5 minute. Oh my gosh. This is so broken. Why does it just black screen me? Where is display capture? Okay. All right. And so it's 150 right now, or yeah, 150 my time, so 10 minutes before market close. See, we got this big sell-off, close below here. Um, we're no longer in a good position to sell off since we're kind of in the middle. Because that's typically what I'm looking for if I'm going to do a market on close trade. If we're right at the edge here, as we go into market on close, it typically makes for a really good trade. But what I wanted to show you is how much easier it is to use NinjaTrader for this. And the reason for that is because this is the other strategy that I'm doing, is I'm just simply trading the same entry model but off of imbalances. So the rule here is, okay, we have this red area, this is an imbalance, and for me to get a valid signal, I'm looking for the same thing, an outside close with more volume than the prior candle. So more volume down here, look where the cursor is. This red candle has more volume than the prior candle. It closes on the right side below the 9 EMA, and it closes below. And it's not too big of a candle. It's within the average true range. And so that would have been a good short here. You can see I jumped in on this one, which you can see is a little sketchy because we are trading into a buying imbalance, However, this is where the prior day value area high or low from the 23rd was about there. So I saw that rejection for the second time, and I knew we had a good opportunity to go lower, and you can see it absolutely did. But again, so what we're doing with this strategy is instead of just waiting for it to be at a prior day value area, low or high, we're just taking it with the trend. So another example would be right here. So we have this green candle. It has more volume than the prior red candle. It closes above it. It's on the it's above the 9 EMA, so that's the right side. So here, what I'm going to do is I'm going to take this trade, and I'm just going to sell it going into the imbalance. This is my second trade for the day, so I don't need to try to get a big move or anything. I'm just adding on with a nice small win. High probability we're not trading into the imbalance. As you can see here, price just kind of blew through it anyways, but that part doesn't really matter. Here's another one. You can see more volume than the prior candle. We are trading into a selling imbalance, but this is clearly an uptrend. We're on the right side of the 9 EMA. We closed above the high of the prior candle. We're coming out of this fair value gap, or excuse me, out of this imbalance. So this is where we are expecting to see buyers at imbalances. If we have a green imbalance, that means we should see buyers down here, which is exactly what we see. Same thing. So again, what I'm saying is if we have a buying imbalance, we're looking for that outside candle close with volume, which means yes, these are the buyers. They're stepping back in. They're pushing back up, just like over here. Um, where was it? This one, yeah. So if buyers stepped in over here before, we're looking for buyers stepping again. We have it there, and then we have it again right there with the volume and being able to extend and close beyond that prior candle showing, yep, sellers are coming in. And we even had a, no, we didn't have anything there on the 3 minute. I do this on the 5 minute as well, but I really like this method mostly just for the 3 minute. Let's see. Yep, and that's what we had today. So a lot of opportunity every single day. It's given us that opportunity on the 3 and 5 minute. Uh, so yeah, that's what I've been doing. It's easier to execute, so I've been enjoying that, and I hope this helps you. And yes, I know I do a lot of strategies, and I think I've proved my case that they all work. It's just a matter of what can you execute in real time, and I'm finding that this is easier for me to execute. It makes more sense to me. There's kind of less things to look at. I'm just looking for an outside close with volume on the right side of the 9 EMA being delivered outside of an imbalance where we're already expecting buyers or sellers to be, or off the prior day value area high or low. And today it just so happened that as we were selling out of the prior day value area high or low, it was also in a selling imbalance area. So we should expect to see sellers in there again. And once we do see them, that's when we take the trade. And that's how we do it.